All right, guys, part two of this buying a long-term stock, the 10 things you got to look at. Buy and hold at least a week. So we covered the first four, and honestly, the first five are the most important. So pay attention to those for sure. Let's get into PE ratios now. This will take a minute. Let's get back to Walmart. So the PE ratios on the summary page. PE ratio was an important thing years ago. It's the price to earnings ratio. For Walmart, it's 20, which is kind of a mid-range thing. PE ratio is price to earnings. Price to earnings ratio shows you whether a company is really high priced or low priced, and whether it's a growth company. Walmart is not a growth company. Its PE ratio is below average at 20. Companies like Tesla and Apple, for instance, they have crazy PE ratios. Tesla's 1,300 PE ratio. Don't touch Tesla. Even Zoom has 400 PE ratio. Don't touch Zoom. Companies like Citibank and MetLife have a low PE ratio. They're not growing at all. Average would be like 20 to 40. That's the Walmarts. That's the Microsofts. That's the Procter & Gamble's. High would be a company like Apple with a 41 PE ratio. So that gives you an idea of PE ratios. Let's move on to beta. Beta is also here in the same chart. The summary has the beta. Beta is a measure of the volatility of the stock relative to the Dow Jones or S&P 500. Beta of 1 follows the stock market perfectly. So it follows the S&P moves and ratios very similarly. A beta of 2 would move twice as much as the stock market. So a beta of 2 is a growth stock or a volatile stock. Walmart is below 1, so it's kind of a slow growth stock. And of course, companies that have high betas would be people like Tesla or Apple. They're going to move more when the market moves. So we'll get back to the chart, back to the list here soon. Have a good day. Talk to you soon.